Chris is calling from Calgary. Go ahead, Chris.
Yeah, it's actually Mike. How are you, gentlemen?
Very good. Thank you.
What I wanted to talk about today was Bombardier. I'll tell you, a couple of weeks back, I bought as much as I could afford, and that was based under the premise that traditionally, Bombardier is a company that the federal government and the Quebec provincial government, they're never going to let this company go bankrupt. Mm-hmm. Therefore, now I saw it as a buy. I've made a lot of money this week. What do you see for the future? For me, I think by summer it's going to be over $2.
Thank you very much, Mike. So Bombardier, the question.
Mike, I hope you're right. I'd love to see people make money. This is not in our wheelhouse. We don't buy companies that are dependent on something good happening in the future to be successful, and I think that's the case with Bombardier. So in some ways, it's a bit of a lottery ticket. I think you have to be really careful when you say the government won't let companies go bankrupt. They may not go bankrupt. Years ago, I had the same conversation with somebody about Air Canada. It would be around. The question was there equity left for the stakeholders, for the equity holders? The bond holders wound up with the assets. And I'm not saying Bombardier is in this spot, but I think that they're in a tough spot. They're capital constrained in their ability to continue on with their jet program. So there's other people who would be better at telling you if you broke it up and what the parts are worth. I prefer to invest in things where the numbers are good and they're getting better. We're not dependent on something positive happening in the future to be successful. And it's great the stock's had a bounce, but it's bounced into a declining moving average. It's had lots of bounces along the way. I think you have to be very careful with this one.
Okay, so you're not a fan of that. Now we have Chris in Calgary. Go ahead, Chris.
Morning, Andy and David. I'm calling with regard to Brookfield Renewable Energy Partners. I see they got a dividend of about 6.5% right now after a recent increase, and I'm starting to wonder, I wonder with TransAlta Renewables, is this too good to be true, or can I kind of count on it to maintain the status quo? Thanks. Right. Have a great day.
Great question.
So look, I said at the outset, there's three camps that you can kind of focus in right now. One is the leadership that we had going into the correction, consumer and technology, and that is reemerging as leadership. Second, the stuff that really was beaten up over the last 18 months that now looks as though it could have a tradable bounce, and that's the resources, the basic materials, and the industrials. And I think the third camp is yield. And we're in a world where the yield in the 10-year bond, below 2% is exceedingly low. There have been very few times where the yield on the average stock in the S&P 500 was above the yield on a 10-year bond. And in those cases, buying yield stocks was a great strategy. So dividend yield-oriented stocks last year were a tough game because everyone expected rising rates from the Fed. The world is reassessing that right now. Dividend payers have a new bid to them. They're performing really well. There's a whole bunch of ETFs like FDL, which is the Morningstar Dividend Leaders ETF. These things are acting really, really well. And of course, the utilities are behaving really well. So as a sector and as a neighborhood, dividend and dividend growth is behaving much better. Brookfield, of course, fits in with that sort of utility-like group, and the dividend yield is very attractive. So if the market gets turned and really starts to rally, it's unlikely that these will keep up with what's going on in the market. But from a risk-reward standpoint, they're not so bad. There's a lot of people who need yield. I think the yield is sustainable. So you can pick up a yield, you probably pick up a little total return. You may not get a full market return over the next 12 months, but you're going to get a very good total return. And so that's a third camp within the portfolios that I think you can take a look at.
Right. Wow, look at TransAlta Renewables. That one has been losing some steam. Yeah, we'll have to have a look at that on commodities. Bill is in Sarnia, Ontario. Go ahead, Bill.
Yes, good afternoon, gentlemen. I'm calling about Interpipeline. Obviously, with the decline in the price of oil and the oil side is not looking as bright as it was a year ago, Interpipeline has come down. A minute ago, you said you weren't a bottom fisher. Would this be a time to buy Interpipeline, or is it to be avoided? I'd appreciate your opinion. Thank you very much.
Thanks a lot.
So our base case is that energy has become mass manufacturing. When you drill a hole, you know what you're going to find. You get like a 99% chance of success. And with certainty, there's a lot of capital that's available. Despite the fact the sector's been out of favor for 18 months Every time an equity deal comes, people are prepared to buy it, hoping oil's going back to $100 a barrel. And I think that's really unlikely. So when you look at the producers, then you have to look at who's the lower cost producer, who will be around and who will not. And a lot of Western Canadian energy is not inexpensive to produce. And so I think you have to question the assumptions around volumes of production, which means volumes of transport. And I think that's one of the problems with some of the Western Canadian infrastructure companies and infrastructure companies in general. So I think you want to be careful. If I were to buy energy exposure today, I probably would focus on integrated oil companies because there's some benefit from lower price purchasing and the margins that they can create refining. And the big balance sheets that give them opportunity to make some purchases if assets become available, and I think there's going to be assets available.
We are going to be right back with David Burrows, President and Chief Investment Strategist at Barometer Capital Management. The topic, North American large caps. The number, 1-855-326-6266.